Welcome, everyone. Thanks for coming to our first tech lecture after a long, long break. As you know, these lectures are more or less monthly events to bring distinguished academics to the bank so that we can all expand our horizons and catch up with cutting-edge research. So when we were thinking about our lineup this year, we decided that we are going to make a point of inviting all women cast. So we have a list of brilliant women who are all making very important contributions to economics. And I am very happy to kick off this series with Tavneet Suri. For those of you who don't know her, Tavneet is an associate professor of applied economics at the MIT Sloan School of Management. Obviously, she works on development economics, but she specializes on sub-Saharan Africa. And she's been working on many interesting issues, but the things that's most close to our heart in the bank, she works on digital financial services for the poor. As you know, we have been very active in the research department in this area too, with measuring financial inclusion through Findex and related work. So we're very happy and excited to have her here. And Tavneet has been doing path-breaking work in this area, specifically her work with Bill Jack, looking at the M-Pesa case and the impact of reducing transaction costs through mobile banking and how this affects consumption smoothing and risk sharing. This is really required reading for anyone who's interested in this topic. So please join me in welcoming her. Thank you.
I think I just remembered to turn on my mic. Great. Thank you for that very warm welcome. It's lovely to be here. And thank you for the invite. I'm glad I'm going first and not last. Given the lineup, I'm not sure I would want to follow any of the women coming next. So hopefully you guys will enjoy having them out. So as Asla mentioned, I'm going to talk about digital credit products, or digital products a little more generally, because I wanted to sneak in some of the work we've been doing more recently. Please feel free to ask or interrupt as I go along, but I'll also try and leave some time for questions at the end. So as Asla mentioned, we've been doing a bunch of work around digital financial services and more broadly what mobile phones are doing. And so I think it's not so hard to motivate this, where mobile phones have been changing life in the developing world quite dramatically. So from basic communication to financial services to cheap access to the internet. And then there's also, they're used for everything from health, education, encouraging behavior, encouraging people to save, encouraging people to adhere to medication. We have some stuff on encouraging people to turn up to vote. But they're being used for a wide variety of purposes and interventions. In terms of finance, they've dramatically changed finance in the developing world. So if we think of mobile money, it's now in 93 countries, 32 million transactions a day on mobile money systems. And as I'll kind of outline, it has had impacts on poverty and transformation in some of these countries. And then built over mobile money, you've seen sort of this explosion of digital credit products. These have smaller effects, but they're also expanding access to credit dramatically and improving resilience. And I'll try and show you some of that today. And then hopefully, the way I've set this up is I'll try and go through some of our papers or some of our results on the impact of mobile money on poverty and transformation. I'll try and do that quickly. And then I'll talk about the digital credit stuff, which is brand new, hot off the presses. Paper doesn't quite exist publicly. So, but I'll talk you through some of what we're finding on that. And then I would like to spend a few minutes talking about kind of what else we're doing around digital products in Africa. And so I'll talk about a couple of studies that are in the field just to kind of motivate what we're seeing or doing and kind of give a sense of where this is headed more generally in these economies. So that's kind of hopefully what I'll cover today. So let me start with our work on M-Pesa, which is the mobile money system in Kenya. M for mobile, Pesa means money in Swahili. This is work with, as I mentioned, Billy Jack, who's here at Georgetown, here meaning DC, not here at the bank, Georgetown. And so over the last 7 or 8 years, Billy and I have been studying M-Pesa in Kenya and kind of following how it's changing people's lives in a financial sense. Okay, so just to give you a sense of mobile payments or mobile money, this is sort of the adoption of mobile payment accounts across the world. You can see kind of reasonable take-up in a bunch of countries. You can see Kenya standing out over there. This won't work, but over there in East Africa as sort of very high penetration. But you can see it's kind of growing in large parts of the developing world. Okay. If we look at Kenya, this is from the data Billy and I collected over kind of 6 or 7 years in Kenya. You can see, so the blue line is just the overall adoption of a mobile money or mobile payments account across our sample in Kenya. And it goes in 2008 already quite high to almost universal penetration by 2014. Of course, you see the poorer and those without bank accounts lagging to start, but they pretty much catch up. Okay, and this is kind of the story we've been studying over this time and kind of tracking both these developments as well as how it's changing what people do in their lives over this period in Kenya. Just to give you a sense of what happened to financial services in this time in Kenya. So this is kind of what financial services look like. This is mobile money agents, kind of where you would cash in and cash out on mobile money, as well as banking, insurance, postal banks, et cetera, et cetera. And by 2011, you kind of see this explosion of access to financial services for people. So financial services basically became much closer to Kenyans. This is the transaction cost thing that Asla was talking about. And so one of the things mobile money has done is bring a financial system just much closer to people so they can interact with it more. Just to give you a sense of what this looks like in numbers, this is for the average person in our sample. You know, before mobile money started in 2007, bank branches were about 9 kilometers away. At the launch of mobile money, they were already about 5 kilometers away from a household. And you can see this completely decline by 2015 to about 1.5 kilometers, right? That's a 15-minute walk. So that's one of the big things mobile money has done is bring a set of agents close to the households. And on mobile money systems, what do agents do? They're going to provide your cash in and cash out. So think of mobile money as being a digital account on your phone, but I need to cash in and cash out. The agents provide kind of the equivalent of ATMs for the service. Okay, if I want to put money in, I'm going to have to go to an agent to load money onto my account digitally. And if I want to withdraw, I have to go back to the agent to kind of cash out. Okay, and so the distance the agent is to you matters quite a bit. Okay, so this has kind of been the developments in Kenya. And then we used kind of these changes to look at what happens to households as kind of this access to financial services comes so much closer to them. Okay, so let me give you some idea of kind of what we were finding on mobile money, and then I'll try and do kind of more on the digital side. So M-Pesa lowered the transaction costs of these person-to-person payments. And so the first question we started with, as it's lowering these transaction costs of person-to-person payments, what does this do to people? Is it changing kind of how they engage with others? Does it change their networks? Does it change kind of their lives in some substantive way? And then we kind of try and trace out the longer term effects. That's why we have kind of this survey that came out in 2014, 2015. So those were kind of the big research questions we had. And one of the core components of what we find is kind of this improvement in financial resilience. So a core component of financial well-being is this thing we call resilience. When something bad happens to me, can I kind of recover from it? How well can I deal with a bad thing? And in developing countries, as all of you know, I don't really have to motivate this, there's very little private insurance except for rich people. And in this part of the world, very few public sector safety nets, okay? And so what do people do instead? Well, they're going to create social ties or use social ties as a way of providing them insurance. So I'm going to pick on like the very few people I know in the audience. Sorry, David, you're up. So what do? I kind of make a deal with David and say, okay, when something bad happens to you, I'm going to help you. And when something bad happens to me, you'll return the favor. I think we used to have a joke in grad school that you couldn't be a development economist without writing a paper on this sort of risk sharing in some way. I finally wrote mine, maybe after grad school. But basically, we kind of people use these social ties to insure themselves from bad events, okay? And these have been documented in a lot of developing countries across the world now, large parts of Africa, Asia. There's a lot of use of these social ties, and there's an accompanying literature trying to understand how efficient this is, okay? Is there moral hazard? Is there information issues? David just doesn't, tells me it's a shock, and I don't actually know it's a shock. These sorts of issues. And so the one we sort of asked about in this paper is, well, what about transaction costs, right? If I make this deal with David, if something bad happens to him, I actually have to get money to him, right? And that has some transaction cost in transporting it. And the transaction costs in these economies just across distance and travel can be really high. And so what mobile money did was kind of, even though it's going to help in this network, it's not like it created these risk-sharing networks. These networks existed. It's just going to make them a lot more efficient and a lot easier to do these transactions. So before, what would I do? I would travel to David's house and hand him cash, or I would give it to a bus driver. Maybe it gets there, maybe it doesn't, et cetera, et cetera. Instead, now everything is going over the mobile phone system. Okay, so it's going to just substitute an existing set of transactions, but lower the transaction costs quite a lot. And part of that is I don't have to travel to where David is anymore. Okay, so let me give you an example of kind of what we find in this. So this is tracking what happens to consumption when there's a bad event in your life. And we think of efficiency here as if something bad happens, it doesn't affect my consumption patterns. That's pretty efficient. I'm able to insure away the bad event. So if I lose my job, it's not like I can't feed my kids tomorrow. Okay, so the way we tested this was to look at how people's consumption kind of responded to bad events, okay? And we compared this across users and non-users of mobile money. And so this is for health shocks, when someone gets sick in your family. And so we look at what happens to total expenditures. And you'll see that for users, they kind of go up. For non-users, they go down a little. And then we tracked out the components of this. And so we looked at medical expenses, and you'll see both of those go up. So basically, if someone gets sick, whether you're poor or rich, whoever you are, you will go find a way to spend on medical care for them, okay? And so we see medical care go up in both types of households, but what you end up seeing is for the people who don't have access to mobile money, they have to pull it out of other parts of their budget, right? They go spend on medical care, but it means they're not spending on non-food. Actually, one part of non-food is education, so we see education expenses go down. And they'll spend a bit less on food because they have to take that money out of other parts of their budget. For the people who have access to mobile money, you see them actually increase lots of their budget. And this is coming from them receiving money over the phone from their friends and family, okay? So they're able to spend on medical care, they'll spend on non-food, they'll spend on food. The whole, like, if you're sick, make sure you eat when you take medication. That kind of seems to show up in our data too. Okay, so they're much better able to deal with these bad events because they can reach out to friends and family pretty quickly over the mobile phone, receive money, and kind of maintain what they need to do in the face of these events. Okay. So that was kind of one of our first big results, is you see this change in the efficiency of how well they're able to deal with shocks, because they can reach out very quickly, very easily, very cheaply to their network on these mobile phones. I'm not sure. I did put this. Okay, I was wondering if I added this. So the other bit that we saw in this was if we look at the networks, we actually see a growth in your network, okay? Now, this might not be a true growth in network. It's not like I'm finding new people. It's just what used to happen is because money has to travel across space, I would never make a deal with Mahesh. Look how far Mahesh is sitting. It's just too expensive to ever engage in a transaction. Right? Because by the time, if my kid is sick and I need some Tylenol and the bus ride is $5, you kind of do the math and say it's not worth it, okay? But with mobile money now, I can transact with people who are much further away, okay? So some of the efficiency gains we see is sort of the straight up reductions in transaction costs, but also this idea that there's no difference between David and Mahesh, who live very far and very close to me, on a mobile phone because it costs the same to transact with them. Unlike if there was any transportation involved in handing cash over, there would be a difference because someone lives far and close. Okay, and the benefit of that is my ideal network, if I wanted to sort of insure my risk, is someone who looks as different from me as possible. And it turns out what would happen before M-Pesa is the networks would be pretty limited in geographic space because of these transaction costs. So David lived quite close to me, but it turns out if there's a flood and both of us get hit, he can't help me. Okay, but now I can grow my networks geographically, and that allows me to sort of have a more efficient insurance network over the system. So that was kind of the first set of results that we found on mobile money, was kind of this growth in how efficiently you could manage your financial life, and how resilient you were to all these bad events that happen. And then we went back to kind of look at the longer term effects. This is also with Billy, saying, you know, if we really think that there's this efficiency improvement in how you're able to insure your risk, we would expect this to have longer term effects. Okay, and I'll talk about the mechanisms in a second, but let me give you the core results. This is distributions of consumption or income, whichever one you want to call it, for people who had no change in access to M-Pesa and a change in access. And that's female-headed households and male-headed households. So this is the change in consumption over that 8-year period. And you basically see that in female-headed households, their incomes go up, okay, as a result. And I'll show you just the poverty results very quickly. We're going to see reductions in extreme poverty as a result when incomes go up. And so over the long term, you see basically about a 2 percentage point reduction overall in the country. In poverty, that's about 186,000 households that come out of extreme poverty as a result. Okay, and we see bigger effects for female-headed households. Let me add a couple more things. We also looked at occupational choice of men and women. And you'll see there's no real change in occupational choice of men, a little, but mostly for women. So we see women switch out of farming into more sales and business, right? So this is not business setting up Apple. It's, you know, trading, local stores, a little kiosk, a trading stall in the market kind of stuff, okay? So we're going to see this sort of occupational shift for women. Again, it's going to be about 200,000 women that shift occupations, and this happens both in female-headed and male-headed households. Okay, so there's a pretty big effect on women and a small change in assets. I'm just going to give you the overall headline results. So over the long term, like I said, we saw about a 2 percentage point reduction in poverty in Kenya as a result. And like I said, about 186,000 women switched their main occupation away from farming into business and retail. Okay, so those are kind of the big the long-term effects of mobile money as we traced out the system in Kenya. Okay, any questions? Yeah.
There we go. I was wondering, you mentioned that you saw women switching from farming into trading and other small businesses. Do you have any sense as to the why or the mechanism as to how M-Pesa led to that?
Yeah, it's a great question. So I can only hypothesize on that. I will admit that I wish I had perfect foresight on what we were going to find, because I would have written different survey instruments. I'm sure you have the same experience, David. You know, given all the microfinance research that had happened, we kind of didn't really expect there to be a differential gender effect. So, of course, we didn't ask everything we could have asked. I think some of it is when we think of what insurance does, right? So higher risk, higher return. If you think people's downside risk is better protected, you expect them to do riskier things. And so I think this switch is synonymous with doing riskier things. I do think why, there's a couple of hypotheses we have, which I hope someday someone will test. You know, one is that women have an account that's private to them, and it gives them more control over what they have. You know, that explanation is consistent with some of the work Rohini, who will be here. I don't know if she's presenting that work, but she will be here talking about bank accounts and linking bank accounts, linking social pay to bank accounts for women, and how this changes their labor market opportunities too. So it could be that. I have an account that's mine. My research manager on this in the field in Kenya is like one of 26 kids. His father has 4 wives, and he loves mobile money because he goes, oh, I can send it to my mom. If I send it via a bus, it kind of arrives in the house with big fanfare, and you know, his father takes control, and it gets distributed in some unknown way. But this way, he can send stuff to his mom. So that's sort of kind of allowing you privacy over your own transactions might be part of it. I think the other is that the women are often not the main occupation of the household as a whole. And so it's easier for them to switch than for maybe the main occupation to switch. That would be kind of the big two things. Okay, so that's kind of the mobile money stuff. What I want to do now is show you our new results on product innovation and some of the stuff we've been doing on product innovation. So much as, this is great and mobile money's been great, I always had this sense that there was a $100 bill on the street and nobody was picking it up, right? If you think of computers in the US, when computers came in, right, Bob Solow famously said, you can see them everywhere except in the numbers. And that's because the gains or the productivity gains were not from the computers themselves. They were from the integration that followed computing, right? And so there was always this sense that there should be more integration. And where's the integration? So I'll give you a couple of examples of stuff we're doing around that. The first one will be sort of work we've just finished on M-Shwari, which is a digital bank account. That number needs to be updated. I think it's now 20 million users. Just to give you a sense of what that is in Kenya, there's probably close to 20 to 23 million adults. Okay, so it's quite a well taken up product, and it's a fully digital bank account. So what do? I go onto my phone, and by the way, these are not smartphones. These are all dumb phones, as we call them, right? So I'm going to go onto my phone, open up a bank account on my phone. And if I want to put money in it, I'm going to put money into my M-Pesa account through the agent network, and I transfer it into the bank account, transaction cost free. If I want to withdraw it from my bank account, again, I'll do the reverse transaction and withdraw it to the M-Pesa agent network. So it's basically a digital bank account layered over mobile money. And it's going to allow you to do some things that mobile money won't. You can get interest on your savings. You can ask for a loan. You can kind of do more bank-like things than you could on mobile money. And they're using data on your M-Pesa transactions to kind of score you in a credit scoring sense to decide whether you get credit or not. Okay? So what we ended up doing was trying to understand whether this credit component actually first increased access to credit in some way and then had impacts on people. And what we're going to use is kind of the score that they create for the credit. So think of your credit score here. There's a similar credit scoring system in M-Shwari. People above a certain credit score get credit and people below don't. Okay? And of course, your credit score can evolve over time. So at some point, you might become eligible in the future, even if you're not currently. Okay, so I'll show you. So we basically then tracked about 4,000 people in a survey 2 years after they joined M-Shwari, approximately. And try to measure kind of what sort of impacts M-Shwari had. And the way we're measuring this is kind of a regression discontinuity, if you know that. But basically, people who are just above the credit score cutoff compared to people who are just below. Okay, and the idea is those guys are pretty similar because I kind of had to draw a line somewhere. So we're sampling within a very tight window on the credit score in the survey. And I'll show you some pictures of kind of what we're finding on impacts for M-Shwari. Like I said, this is only the credit component because we only have the research design on the credit score cutoff. Okay. So here's the sort of first stage set of results. So this is the credit score. As you can see, we've picked a window of -10 to 10 approximately. This is a pretty small, tight window in their sample. It runs from minus a couple of hundred to plus a couple of hundred. Okay. Given that they have that many accounts, it turns out that sample size in this small window is also pretty easy. Okay, so this is kind of the credit score cutoff, and we look at people just above the credit score relative to people that just below, and we look at whether they received an M-Shwari loan or not. And you can see they're more likely to have received a loan. You'll notice that on the left, it's not 0. Okay, and this is because over 2 years, you can improve your credit score. Okay, you can kind of make yourself eligible for a loan later. Okay, so you're more likely to have an M-Shwari loan if you are approved for M-Shwari. We find that overall, we kind of tracked whether your actual credit access grew. So one of the worries is this would just substitute something else, and you don't actually grow the access people have to credit. But we see that you're more likely to have any loan over the last 2 years or have had any loan over the last 2 years. If we look at the number of loans you've received over the last 2 years, it's also higher. So it does grow your access to credit quite a lot. And then we can look at the total debt you have, and that also goes up. Okay, so it is expanding access quite dramatically in this population. So it's not just substituting for some other credit that you have. Okay, and then we can track kind of what it does. I'll show you a couple of pictures of what it does. We looked at lots of other things and don't find effects on all other things. So that's how you should interpret them. So the first one we looked at was resilience and coping. So basically we kind of asked, do you engage in any of these things to kind of help to sort of manage negative events? So if something bad happens to you, do you pull your kids out of school? Do you miss a meal? Do you sell an asset? Do you kind of cut expenses? And so basically what this is saying, we check whether you used any one of these coping mechanisms when something bad happened. This is kind of how much lower it is for the people who got Mshwari versus the people who didn't. Okay, so you see kind of a 5 percentage point reduction in the use of a coping mechanism as a result of Mshwari. Okay, so I should highlight, I forgot to say this earlier, is Mshwari is kind of, you borrow money, these are all 30-day loans. So it's a very short window. You pay an interest over 30 days. You can roll them over if you need to, but these are very short-term loans, okay? So we see this reduction in coping mechanisms. All I've done here is kind of change the bandwidth of the score just to make sure these results are robust across those bandwidths, right? So the idea is I'm just taking different windows in that -10 and shortening it just to make sure that the result is robust to those. Okay, so this kind of fits very much with the mobile money story too, is that people are using it as a way to manage kind of emergencies that happen in their life. They'll borrow money and kind of try and pay it back after that. Okay, and then the second thing we do see is this is, again, the coefficient on whether you spent anything on education or not. Okay, so this is pretty much the only change in expenditures we'll see, which is people are more likely to spend on education when they have Mshwari relative to people who don't. Okay, and again, this is just showing robustness to the bandwidths. And so people seem to be using it for emergencies and sort of paying for education. The way I like to think about these results, if you think of my earlier health results, on M-Pesa, what was happening was when someone got sick, they would cut education and pay for medication, right? And so what was really affected was kind of the education side, not really medication, because everybody spends on medical care. So these results actually sit very nicely with those, right? They say when something bad happens, you borrow money, you're less likely to cut other things. Remember, one of the things you would cut was education. And so as a result, you're seeing education go up, okay? And so we find kind of very, very very consistent results with our earlier mobile money work. Okay. Great. So that's kind of the Mshwari work that's coming out right now. I'm going to try and talk about a couple of other projects that are much more earlier stage, just to give you a flavor. Yeah? Sure.
You'll be doing a gender-based analysis on those previous results, the way you did the
Yeah, we don't find any gender-based results in Mshwari. Yeah. Leora. Hi. Yeah, so happy to talk about that at great length. There is a credit bureau, so they're reporting into the credit bureau. So one downside of this, I mean, the expansion in credit access has been big on these digital systems. Mshwari is not the only one. There's now, I think, 10 such products in Kenya, all of which are like at 1 million or 2 million users. So they do report into the bureau if you default. The reality is these are small loans. So I'm not sure I like the credit bureau so much, Leora. You know, and they're all automated, right? Why is the bank doing this then? They didn't do it before. It's because your transaction costs of this product are so much lower. I don't need tellers. I don't need loan officers. I really change my costs in the bank tremendously. But then it means, so I have a story for you. It's not a great story, but someone got reported, not by the bank doing Mshwari, by one of the other banks, into the credit bureau for defaulting on 0.06 Kenyan shillings. That's 0.06 US cents. Not so great, because of course it also costs you $20 to get a credit report. So there's stories like that because you automated it and you didn't think about the rounding business, right? Like, oh, they missed some tiny fraction of interest. Do I really want them? You weren't intending that, right? So I think coming with this digital stuff, we do have to think about what the role of the credit bureau is. There hasn't been much positive reporting. They've just started to require positive reporting into the credit bureau. That's good. And I think at some point, the banks should think about what amounts they're reporting in. But the credit bureau, I think, does help them a little. And all of the digital systems are now reporting into the credit bureau. Yeah. Yeah. Yeah, I think the problem is much as they've started to require positive, there's very few people reporting in positive at this point. Yeah. So I think that's going to take a bit of time. I think the M-Shwari story, actually the story people tell on the street is it's all people starting businesses with M-Shwari loans, but it's not. These are actually on average in our sample, it's like a $2 loan, $5 loan. You're not going to start a business with $5, right? But you can buy medication or whatever with $5. And then you can kind of re-borrow. So they are building histories with the banks themselves or the lender themselves. So even in our data 2 years out, for people who are above the credit score, they have something like 6 M-Shwari loans. Because I borrow, I pay off, I come back and a couple months later, borrow again, pay off. So over 2 years, 6 loans is not a small number of loans. So they will build history, and as you build that history, most of them will grow your limits. And some will reduce your interest rate as you build a history. So depending on the lender. So with that particular lender, you will build history. That's positive. Yeah. Any others? Okay. All right. So let me try and talk about a couple of other things which are really early stages, and then happy to take more questions as we go. So this is something that Dean and I started in Kenya, which has been slower, but hopefully might still work. The innovation is kind of interesting, and it kind of gives you a sense of what might come from mobile phones as we go along. This is a digital bond that the Kenyan government released last year. And so, again, it's going to work on a dumb phone, not on a smartphone. It's called M-Akiba. And the idea is to try and make the bond market accessible to the average Kenyan, right? In general, the bond markets are not. You need to buy $1,000 worth of bonds through a broker of some sort. So what they did was they released a bond, changed regulation and released a bond that you can buy in $30 increments. Okay, so I can buy a $30 increment of bonds. It's going to pay an interest rate of about 10%, which is pretty good. Most banks don't pay interest on small amounts of money in the banking system, and it coupons out every couple years. And you just buy it off your mobile phone. Okay, so you need to sign up for a bond account. You do that off your mobile phone in like literally 3 steps, and then you buy a bond worth $30, and then it pays you 10% every 6 months, comes clear after 5 years, and you get your principal back. Okay, and the other bit they added is if I want my money back, I can actually trade it in the bond market immediately. Again, off my mobile phone. Remember, not a smartphone. So again, off a dumb phone. Okay, and the idea was to create both allow sort of average Kenyans or lower than average Kenyans to engage in the bond market in some way, and to create a product that actually might be a reasonable savings product, right? 10% is a pretty good return for people on their money. So we're doing a study on what this does, both to kind of savings and behavior. But the other bit that we're trying to understand is whether this is a way to do financial literacy. So as we know, financial literacy probably is extremely important, but very hard to actually do in a way that has effects. There's been a ton of studies basically showing this is really, really hard to do. So the idea we had was maybe the easiest way to do financial literacy is learning by doing. People will buy and get returns and trade, and this makes them think about how to add these numbers up and whether it's a good idea to sell now or later or whatever. And so we wanted to see if this kind of has an effect on financial literacy, because people are starting to engage in trading of financial assets in some way. Okay. So hopefully we'll have results in about a year. But it's been a big change in how people even start to think about mobile phones above mobile money and credit is, can I actually buy other assets? And the beauty of things like this is there's a platform, right? So much as the government can sell a bond on it, corporates could launch a bond on it, right? There's no reason that other entities couldn't use this for financial assets. So I think the platform was built with the intent that there might be other trading of financial assets on a platform like this that you could trade in very small quantities, okay? That allow a lot more people to engage with those assets. So that's one of the things we're doing, is trying to understand this product and understand what it does to people's both savings behavior as well as, like I said, financial literacy. Okay. I'm going to take a skip from financial markets now and talk about some work we're doing on mobile internet. I'll have some really preliminary results that are like literally hot off the presses, i.e. off my computer yesterday. And let me motivate this work a little bit. This is with my collaborator in Kenya. What we're trying to do is understand what the internet does to people's lives. There's been some work by a couple of people sort of documenting as the internet comes into Africa, what did it do to jobs? I think we're trying to get a little more micro with this and really understand how it affects people directly. So let me tell you what we did or what we're doing. Mobile phones have reduced the cost of accessing the internet tremendously. So what we ended up doing was doing an RCT where we looked at people who have data-enabled phones. Now, I learned this the hard way. It doesn't actually have to be a smartphone to be a data-enabled phone. There used to be Nokia phones, which come preloaded with browsers, et cetera, et cetera. So you can't download apps, but you can actually browse the internet. So we've got a combination of smartphones and data-enabled phones. So we took a sample of people who have data-enabled phones but have never used data, have never actually used any data on their phones, and we gave them a whole ton of free data. Okay, so we have two treatment groups of 15 GB and 5 GB of data. This is quite a lot of data, actually. And they had this for 90 days. After 90 days, we topped up their accounts, or we just renewed a whole new amount of 15 and 5 this January, okay? And then later this year, we're gonna do a follow-up survey to look at job search, skills, attitudes, and a bunch of these things to try and understand kind of what the ability to access stuff on the internet does. Okay, so that's kind of the RCT. I'm going to show you a bit of, with this, much as we have a follow-up survey, which I don't have, clearly, there's also admin data, so we can kind of see something about kind of what's happening on the back end. So let me show you a bit of that. So what I've done here is look at how much data people are using per day out of admin data. And I've split it by men and women and treatment status. So the black bars are the control groups, the green bars are the 15 gigabyte groups, and the red bars are the 5 gigabyte groups. And then the first 3 are for women, and the next 3 are for men. Okay? And you can see they're using sort of, on the average in the sample, about 2 or 3 MBs per day. That doesn't mean they're using every day, of course. Just to give you a sense of how to benchmark that amount, the average use in Kenya is about 100 MB per month. Okay, so they're using about the average. Now, I should add one other thing. The take-up is not 100%. Of course, not everybody who we gave free data to actually uses free data. The take-up is about 1/3. So you want to scale these by 3, basically. Okay, so we're seeing quite a bit of use. In fact, probably more than the average. So people are using the internet quite a bit. We see women in at least the 15 gigabyte group use it a lot more. Okay, they're doing kind of 2 to 3 times what the others are doing. Okay, and so we're already seeing some gender effects. Again, not necessarily my prior. I'm not sure that I had a prior on this. And then, what are they doing with it? It turns out that they're doing a bunch of social media, shockingly. So there's lots of, I was surprised. I wasn't expecting social media. I was expecting only WhatsApp, but that's not true. So there's a bunch of Facebook, social media, Twitter, WhatsApp, I don't even know, Instagram, whatever social media you want. Actually, that's quite a large share of this is social media. The second thing is job search, actually. Quite a lot of people looking at online job boards that are common in the country. And then we see a bunch of news sites. So a whole bunch of looking at news sites. And then there's bits and pieces of religion, kind of looking at Bible verses online. Yeah, look for Bible, it's there. And a bit of actually online music. So lots of online, not lots, but quite a bit of online radio kind of stuff. I'm listening to music online now, which I wouldn't have access to. So that's kind of what they're doing in that space. Okay, it's kind of the stuff they're reaching out to. So I think when we do this survey, we'll be doing a bit about trying to understand how their social networks are changing or kind of how that's affecting social networks for them. So that's in the field. Hopefully we'll have results again, like I said, from the survey in about a year, but we're seeing already quite some stuff in the administrative data. Any questions? Yes?
Just wondering if this information is from self-reported data or was it admin data?
This is admin data.
Thank you.
Yeah, I don't think, so to be honest, I don't think anybody knows how much data they use a day. Like, I couldn't tell you how much data I use a day at all. It's not that easy to track. I think you can now have apps that do this. I think you'd be shocked at what you use. And there's certainly apps you don't realize that use a lot of data, even though you're not in the app. So I actually encourage people to do this. I think most people I know who've done this go, oh my God, what was I doing? Yeah.
So you mentioned that take-up was not universal, and so how does the number of women compare to the number of men?
On take-up? Yeah, so take-up on average is about a third. Women are slightly more likely to take up as well. Yeah. Yeah, that's right. Okay. I'm happy to do questions because I was told to leave plenty of time for questions. But maybe I'll conclude and then open up for questions. Okay, so this is kind of the internet stuff. Like I said, my prior was not that there would be differential effects for women, but we're seeing that already. And actually, even in the more, they're doing more jobs and more news and stuff like that. A little more Facebook, but more jobs, more news. Okay, so let me take stock a little of kind of where I think the digital technology stuff is headed, and talk a bit about what I think the future might want to look like. As I said, we've been studying kind of a bunch of very different digital products and how they affect people's lives, both economically and even in a more micro-esque way. But there's still an immensely long way to go. Much as Kenya sounds like the tech haven of the world, it actually gets called the Silicon Valley of Africa or Silicon Savannah. I really don't like that name because there's still a really long way to go. Okay, so even when you look at mobile money, it's still largely person to person. Okay, I still do my standard person-to-person transaction, one transaction every month to 6 weeks. That's $10. There's very little use of digital payments, at least in Africa, for person to business, business to business, government to person. Okay, that last bit in India, of course, is changing dramatically, and most of it changing dramatically by force in India, which is a different thing. But in Africa, there's just been very little movement on most other things. Okay, so there's still a very long way to go before you think people's lives are really digital in a financial sense or in any other sense. The other thing that has been very, very slow to happen is kind of what I call liberalization or democratization of the payment systems, right? In Kenya, it's largely held by one company. In other countries, it's 2 or 3. And using these systems or enabling these systems to be used by others is really not happening, okay? M-Pesa had a horrible API up until last year, so horrible that nobody could actually figure out how to use it. I'm not sure they knew how to use it. And so kind of letting entrepreneurs and other services plug into the system really wasn't easy, right? Even when M-Shwari came along, this was them going to M-Pesa and negotiating with a company to build something, right? It wasn't just, I plug into an API and I'm done and I can do what I want to do, okay? And they've got a new API, but I think allowing these channels to be easily more easily accessible by others is, I think, really key here to getting a whole bunch of other stuff. The other thing that's happened in the US is that APIs have really changed organizational structures of firms as they subcontract a whole bunch of stuff that they used to do internally to external firms through APIs. And I think it's still a question as to what APIs and I guess the blockchain will do in developing economies. But there's still a really long way to go to kind of think that we've really become digital as an economy, let alone we're kind of making certain parts of people's transactions digital, but they're still a small part of their transactions, right? Even retail has been very hard for mobile money to get into M-Pesa because it's expensive. The transaction costs are small when I need money to go 200 kilometers, but when I'm buying a bottle of Coke, you know, a 25-cent transaction cost is actually quite high. And so they've been trying to work through kind of how to make it more of a payment system rather than kind of the risk-sharing person-to-person system. So one thing we're also doing now on the payment side is we're just building an RCT now that tries to change transaction costs for retail and basically make it really easy for people to pay retail on mobile money. So they can pay for groceries very easily, very cheap, and you kind of give the merchants incentives to kind of create that avenue. So we've built an RCT around trying to get merchants point of sales terminals and give them incentives for putting stuff on retail and giving customers incentives to use the system for retail. It hasn't quite gotten to MasterCard, Visa level, but the idea is to try to understand what that system needs to look like before it'll actually get there. Okay, so I will stop there and happy to take a bunch of questions.
Thank you very much. Do you want to sit down and take a bunch, or do you want to
I'm
just go
happy
ahead?
to stand and chat.
Okay, so let me just ask you a question. So we talk about a lot, of course, the impact on access of digitalization. It's natural. We are looking at small loans, very short maturities. But as you started talking about the expansion into bonds and stuff, what are your thoughts on potential stability elements?
Yeah, it's a good question. So I think on the bond side, because it's a government bond, it's easier. I think when you start to go corporate bonds, then you start to worry a bit more. It turns out, it's still a very small quantity that's being bought on this system. Even $30 is actually quite high for some people to actually invest in a bond. So I think the quantity is still staying small. I think as long as that's true, it probably won't do much, right? Most of the 99.9% of the bond trading is still going to be big guys buying quantities, right? Or banks actually buying quantities, which is what happens.
And on the loans, how is the repayment?
Yeah, so, these are completely uncollateralized loans. So, the default rates are not trivial, actually. Think of US credit card debt, maybe not that high, but not that far off. So I think the default rates are high for the first loan, right? But then I kick everybody out who defaults. So the default rates on future loans go down tremendously. So as a portfolio, they're losing very little, right? So you start off saying, I'm going to give you a $1 loan or $2 loan. If you default, you're out forever. And then I grow your limits. And so when you're growing your limits, you're less likely to get default because you've already screened out a bunch of people. So I think the portfolio loss is really small. The number of people, not so small, right? And that's where, Leora's comment about reporting into the credit bureau starts to become tricky. Because these are people who probably don't really understand what reporting into the credit bureau really is, right? Most of them have no formal credit other than this. And this is formal credit for the first time. And so, usually I borrow from a moneylender and he sends a goon to pick it up and I pay it, right? But there's not that system here. So I think there's a bunch of financial education to be done around what a credit bureau is, what it means to report as these systems grow.
So have you looked at what it's done for merry-go-rounds and sort of the informal finance system? Has it crowded some of those out to any extent, or they've not been changed that much?
No, so we see no change in any of those. You mean Mshwari, right? Yeah. So no, actually, and we see a crowd in of savings. In the M-Pesa work, we saw savings go up in the long term because it allows you another way to save, and that's cheap and easy. So we don't see any crowd out of those. Even in Mshwari, we're not seeing a change in the number of loans you get from SACCOs or anything like that. It really seems to increase your loan amounts. Now, the SACCOs tend to be, or merry-go-rounds tend to be larger sums of money used for, I am in a merry-go-round, I'm going to go buy a roof with what comes out of it because it's a more substantial amount of money. These seem small, kind of short-term loans that you use to kind of manage short-term things. So I think they're very different things in that sense. Yeah. The other thing is, much as the SACCOs or the savings and credit co-ops are great, access is actually quite low in them, right, of credit. A lot of people use them for payments and for savings, but as a credit source, the take-up is really small. So we did this work in Kenya on credit, and the reason is, for all these things, I need guarantors on my loans. So I need 3 people to guarantee the loan who put money into the SACCO before I get a loan. And that's a really high bar to get 3 people to sign on to your loan, right? And so take up as a fraction of people who are SACCO members is actually quite small on credit. That's why I think it's not really screening that out. Yeah, because it's probably people who wouldn't have very many of them anyways. Yeah.
Thanks. So my question is about using the phone. I imagine, is this your phone number that's your primary identity? And for getting a loan in the bank or an account, typically they need your ID. And so how does this personal ID work with the phone-based banking?
Yeah, it's a great question because it varies a lot. So Kenya's really lucky. They have a national ID system. So you need a national ID to vote. So most people have a national ID. And so when you sign up for mobile money, you sign up with your national ID, and they do the KYC. So the minute I go to the banking product, they're using the mobile money KYC. The same with the bond. They're going to make you open a bond account that's separate, but they're using the KYC that's on, KYC, know your customer, on the back end of the mobile money account. So I think that's the advantage is the mobile money system was set up with an ID. So whenever I want to go to an agent to cash in or cash out, I need to produce the ID that's registered with the account. And so they're all using that back-end identity system, right? This is trickier in places like Tanzania where there's not really a national ID, Nigeria where there's not really a national ID. And so what do you do to substitute for this? It's much harder. Yeah.
Are there any security concerns, and if so, how are they addressed?
Good question. So I think there hasn't been much security issues. I think one of the beauty of these systems not being an app is that they run on text messages. And so most of the text messages says, oh, Tavneet sent you some money. Hacking text messages in any way to get account information is going to be really hard. You can get the number, but you need a PIN. Think of your debit card. Every transaction when you go to the agent has a PIN. And it's hard to track that when it's all built on an SMS system. If it's an app, it's very different. So I think the advantage of all these systems is it's actually pretty safe, given it was running on these old school phones. The biggest security risks are kind of fraud within the companies themselves, which has happened a couple of times. But I think that's the bigger risk. As you go to apps, there are digital credit products that work entirely on an app system, and the way they get data to score you is the app can kind of scrape your phone for everything that you do on your phone. So it can check who you text, it can see the content of those messages, it can check Facebook, it can check your call log. So as you move to apps, I think there's more ways that you could imagine this goes wrong. And then the other, I think, side of this is most of the mobile money systems by regulation are required to, there's max transaction amounts. So you can't make really big transactions on this. And largely people keep, $1 or $2 in their phones. So it's really not that productive to hold someone up for their phone. It's much more productive to carjack someone and drive them to their ATM. So in general, this hasn't been a source for crime either, because it's just small amounts. Yeah. I think there's a question back there.
Come to the microphone.
Sorry, I didn't hear the question.
Please come to the microphone because we're webcasting.
So you did a lot of disaggregation by gender. I was wondering if you see differentials by age. I guess the crude stereotype would be that young people would take to this easily, but elderly might get left out. Do you see those kind of age gradients?
So we haven't looked at impacts along age gradients. I think there's no real take-up that's, at least over some time, that's different by age. Because now actually there's 32 million accounts in the country, which means everybody has an account. So I think, initially maybe the older were less likely, but in general, I think we seem to have gotten over that issue pretty fast.
And even on the intensive margin, like taking a loan or using mobile data in the internet experiment?
I can check that. Yeah. We can check that. I don't know the answer to that, but we can. Yeah.
Questions, comments for Tavneet? There, yeah.
I was wondering from the first part of your presentation on the impact on consumption that shocks can have.
Mm-hmm.
So if you can comment a little bit, I don't think you mentioned anything about savings. You just looked into the transactions, but do people tap a lot into their savings, or what role do they play? And I was just wondering from all of your work if you have any comments.
Yeah. So first, I think savings are really hard to measure, by the way. I think it's been really, really hard for us to measure savings. So in the first couple of rounds of this work, we actually did not ask people savings, because a lot of people are saving at home, and we're interviewing at home. And so it's very hard to ask, how much money do you have at home? Especially, Canada's not the safest country in the world. So we actually did not ask those questions to start with, because it just, it's an uncomfortable question when you're standing in someone's house to ask them how much money they have stored at home. So I think we added those in later rounds when they realized we really were doing research and we're not going to come rob them kind of stuff. We see more savings in the sense of they're putting money on their phones instead of in their mattresses, or whatever the equivalent is of saving at home. I think in response to shocks, people tend to save. I think the big response you see is that they'll sell an asset, which is a form of savings as well. I don't think it's a ton of people who have a bunch of money saved around that's really easy to spend. So when we looked at our results, I didn't show you these, but they're there. If we look at even the risk-sharing effects, they're much bigger for poorer people, because they don't have savings and they're less likely to have all these things that they can do when something bad happens. And actually I think in the top quintile, we didn't see anything, right? But we see it in the bottom 3 to 4 quintiles of income that basically these effects are there. And it's because they don't have much saved and they don't have many assets that they want to sell. And so that's where you see the bigger effects. But yeah, so we see a bit of increase in savings as well in the long-term effects, like over time. But that's some of kind of occupational choice changes, so maybe you have more money, not directly because of mobile money itself. Yeah.
Any other questions? Yes, Claudia.
So a question regarding also stability. So how much regulation is there in this area, and how do you see regulation, given the research that you're doing, where should regulation be more, concerned, in which areas? And
that's a great question. So I think the M-Pesa story is that the regulation was built at the time the product was built, because there was no regulation. So remember, they're not a bank, and mobile money accounts are not bank accounts, right? Other than M-Shwari accounts, but initially they're not bank accounts. I can't go to a bank. I can't transact with a bank in any way. I'm going to transact with this agent network, right? And the agent network is probably the reason for the success of M-Pesa, right? There's agents everywhere. There's 140,000 agents. There's 1,000 ATMs. I mean, it's just blown the formal financial system out of the water. But the money ends up sitting in a bank account, even though it's not held by the cell phone company. I don't want the telco to hold this money, right? So regulation number 1, you don't want the telco holding the float, right? The money in my account. So it does end up in the banking system. They created something they call a trust account. So I actually have a mobile money account for a silly reason, but I do. And so there's in the trust account, there's a little folder with my name on it that has my value, my deposit. I can't go to the bank to withdraw it. I have to go to the agent network, but it sits in the banking system. So I think there's a bunch of regulation then around kind of how it sits in the banking system. This is very different by country. In Kenya, it's like a regular bank account. The bank gets to lend it. In the Philippines, it's 100% cash reserve on that account. Countries kind of decide what that is. And then there's a whole bunch of regulation around transaction amounts because of AML, anti-money laundering stuff. So I think that's the basic mobile money regulation system. And then if you add these credit products, then there's regulations around the credit bureau. There's regulations around reporting of loans as you would in a banking system. Where do I think the regulation needs to go? And on the bond, they kind of regulated how much you could buy, right? I think the credit piece needs to be thought about very carefully, to be honest. Much as it's expanding access, it's expensive at the moment. Some of these lenders are at 10% a month. That's not a small interest rate. And the credit bureau reporting, I don't think, is amazing at the moment. You know, a lot of people just look at the yes, no, are you in the bureau and lock you out of everything, right? It's expensive for people to access their credit reports. How many people can afford $20? You're taking out a $2 loan and you're telling me I have to pay the credit bureau $20 to get a report, to know what's in my report. So I think those sort of things need to be thought about more carefully. There's been this explosion of digital credit, right? Tala and Branch and Mshwari and all these people. But I think we need to really think about what the credit bureau's purpose is. You know, there's a bit of me that's pretty sad that there's a bunch of people with a $1 default in the credit bureau, and it's going to be there for 10 years. Like, there's got to be some thought around when you're taking out these small, expensive loans, what's the role of the credit bureau? And can you educate people around what a credit bureau is? Because a lot of people never had formal loans, so they don't know what this is. And they also think they won't get formal credit very much. So it's like, well, who cares? I'm never going to get a loan from a bank anyways. But they don't realize that banking is changing every day. And they might want a loan from someone who would look at the credit bureau. Or they might want to rent a place from someone who will look at the credit bureau now, right? Or they might want a job with someone. You know, if you get a job with a telco, they want a credit bureau report before they hire you, right? So these things will start to matter in ways that I don't think people understand. So I think that aspect needs to be thought about a bit more carefully in these economies, especially since it's small loan amounts. And then the positive reporting, I think, is super important. And so much as it's supposed to be done, I think it needs to be required, not just, you should do this. So I think that's the other part of this. And then, you know, they'll think about the other bit that I think needs regulation, but we don't really talk about in these economies is kind of privacy. You know, there's a bunch of data you've generated through these systems and kind of who owns it and whose data is it and how should it be used. And, you know, like the apps that kind of scrape your phone for everything, it's like really scary, you know. And I don't think people actually realize that's what the app is doing, right? You go to Google Play and you hit I accept. No, I mean, we don't read terms. I don't read terms and conditions. I mean, not say we, but, you know, I think that, you know, if you think of the old days of credit, people would take out a loan and they're going to sign something. If any of you have done surveys, at least in Africa, we don't get signed consent. Because if I get signed consent, I'm never getting consent. I'm never going to do a survey because people will be like, what are you getting me to sign? What are you taking from me? There's this like extreme discomfort with signing something because it's a big deal. That might have been good for a loan product, right? I'm sure you just hit I agree. Do you really know what you agreed to? So I think there's a very big distinction between signing a document, which people take very seriously, versus hitting a key saying I accept. And so I think that bit also, I think, needs to be thought about. Like, I don't think we've really thought about privacy law in developing countries very much. But I think that would be the other place I would say that we need to start thinking about what we want privacy law to look like and stuff like that. And again, there's a bit of financial education, or not financial, just education around like terms and conditions and reading them, because these are economies where institutions aren't as great, right? I don't read Apple's terms and conditions because I know if something goes wrong, there's a whole set of institutions that will protect me and a whole bunch of people who will create enough uproar if something goes wrong, right? But that's not quite the same in other countries. And so I think hitting I agree to terms and conditions means different things there. Yeah. Sorry, that was lots of opinion, no real.
Go ahead. Dorothy.
Thanks. I had a bit of a more broader question.
Sure.
I guess Kenya M-Pesa has been a pioneer in the mobile money space, certainly, and lots of countries in Africa certainly have tried to replicate the experience. And I guess one issue has always been like, why is Kenya, in terms of mobile money, basically at universal adoption? Why is it taking so long in other countries? And there's a lot of issues around that, and specific conditions, I guess, in Kenya that made it possible. But other countries have also had different adoptions in terms of, like, when we look at, Kenya is very M-Pesa dominated. Other countries, as you mentioned, have multiple operators. There's differences in business models in terms of interoperability. You also look to Asia where, in China, mobile money looks very different, right? We have third-party mobile money-based systems like Alipay and WeChat. And so I guess looking at the experience of other countries to the degree that you know that, what do you think Kenya can learn from other countries?
Wow, big question. So let me say two things on the Kenya versus others. First, Tanzania, I think, is almost surpassing Kenya in the number of transactions overall on the system. We're replicating our work in Tanzania and Uganda, so those results should be out later this year. There are people who have replicated our work in Tanzania and Uganda also, who find actually very similar risk-sharing effects. So there's a paper on Uganda that finds similar things and one on Tanzania that finds similar things. So I think in that sense it is growing. I can give you what my priors are and why I think this is. I think maybe the dominance of the provider in Kenya is some of it, but actually I think the bigger part is business model. Like, it's really weird for an academic to be saying business model, I get that, but the business model needs to be right. So for example, when mobile money started, we started working on it within 6 months of its launch in Kenya. They had 5,500 agents across the country when there were 1,000 ADMs. They knew it was going to be used person to person across space. There was no point having a bunch of agents in Nairobi with no agents anywhere else. MTN, when they launched in Uganda, they had 1,000 agents in Kampala and nowhere else. It's not going to be used, right? If the first use case is going to be person to person across space, if I can't cash out, I may as well not start, right? So I think the business model really mattered, and thank God for DFID. They funded a pilot that M-Pesa did. They thought they were branding it completely as a way to pay off microfinance loans. Take up of microfinance loans is 5% in Kenya. It's going to be used by 5% of people. And they realized, we have the use case completely wrong, and they rebranded it. So I think business model is super important. And I think a lot of the lagging in other places has been this failure to recognize that the business model has to be different. A lot of people think of it as a financial service, therefore I should do what banks do. And banks, yeah, you open 10 branches in Nairobi before you go anywhere else because that's where all the firms are, right? But that's not what mobile money is. So I actually think the business model matters a lot and getting that right. And then the investment in the system matters a lot. So for example, in Uganda, they hit 6,000 agents and the entire platform that they used to manage the agents collapsed. Okay, so take a 3-month break and rebuild it. Not so good for a product that's growing, right? So M-Pesa, like Michael Joseph, who was the CEO at the time, invested something like, I want to say, I might be off, but $10 million in the platform and in M-Pesa, right? So he kind of built the system to take over the world because you can't stop when it's starting to take over the world and redo it, right? So I think all these things matter quite a bit. The regulation, of course, a lot of countries haven't allowed it. So I think there's a bunch of explanations for why it's not growing other places. What can Kenya learn? So actually, I don't think they'll learn from other mobile money platforms. I think they have a lot to learn from, sadly, Visa and MasterCard, right? About if you really want retail on this, or you want to broaden the set of services people can do on this, kind of look to people who figured out those business models, right? So for example, the transaction cost used to be entirely on the consumer. Visa and MasterCard never put the transaction cost on the consumer. They put it on the retailer, right? Because they knew if I charge the consumer, they're never going to go use a credit card or a debit card because you're making them pay 5% or whatever it is, right? So I think there's a lot to learn from people who've thought about those sides of things when you want to do something that's not person to person. That's one. They have a lot to learn in the technology space. How do I build APIs? How do I get kind of tech efficiencies, I think? I think those would be the big things. Kind of, how do I make this usable by a whole bunch of people who want to do other things on it? Because that's where the gains will come. They will learn from the China model. Don't be surprised. I think that will happen also. And then as to independent outside the telco, Bangladesh runs that way, for example. So there are some other mobile money providers that are third-party providers outside the telco system. I think eventually it's going to end up in the banking system in some way, which already Alipay and WeChat are because they're credit card based, right? So I think this whole sitting outside the banking system is just a matter of time before it ends up in the banking system in some way. So I think that will also make things like Alipay, WeChat easier because once it's credit card based, then you get entry pretty easily. Yeah. Did that answer your question?
Yes. So you partially answered my question in your response to the previous one, but I was wondering if you could go a little bit deeper. I was wondering, so your talk today has focused on the case of Kenya, which makes a lot of sense because it's the most advanced in this space. But I was wondering if you could compare how the results that you presented today compare to studies in other countries. And in particular, I was really interested in the switching of occupations because I thought that was really interesting. Yeah. And also in terms of the increased access to loans. So what can you tell us from other countries? You cited a couple things in Tanzania and Uganda, but also perhaps in other regions as well. Anything you can say?
We set out to do other regions. So we started off replicating in Tanzania, Uganda, and Pakistan. The take-up in Pakistan has been notoriously low, and so there's no point studying something that's not being used in some sense. So I think that's one of the caveats is sort of until it actually gets used, there's not much to study. Like I said, independent studies, so I don't know, like, you know, I don't want to sort of overclaim, but they are finding similar things in Uganda and Tanzania. I don't think anybody's gone back to do longer term effects because they're kind of 4 years behind Kenya. So that might be something to look at in 3 or 4 years, is my guess. On the credit side, again, very few studies. We're trying to do some work in Uganda with the same. M-Shwari is now in Tanzania under the name Empower, in Rwanda and Uganda under the name Mocash, in Cote d'Ivoire under Mocash. I think that's it. I might be missing one, so excuse me if I am. And they're getting pretty big take-up. Empower is doing the same really well in Tanzania and the same in Uganda, and Rwanda is coming along. So in terms of an access sense, the bank is going across these countries to build the credit products over this. On the impact side, nobody's really looked at those in those other countries. These are all quite new. M-Shwari is probably the oldest one, and I want to say that's 2014 or 2013. So these are all pretty new products. I can mention stuff we're doing. So something we're doing with another digital lender, not M-Shwari, it's a lender called Tala, if you've heard of them, and they're in East Africa, and they're just in India now, going into India. And so what we're trying to do is think about sort of both this loan size part of the loan and the default side of the loan. So we're doing something that's a little crazy, but I'll tell you about it anyways. So we're taking a bunch of people who default on the system and actually recontracting them. So basically, you know, it's a 30-day loan. Like if truly it's emergencies that people have, what's the probability the emergency is said and done in 30 days? Not so high, right? So we're taking a bunch of people who default and doing an RCT where we give a bunch of them more time to pay without it hitting the credit bureau. And then this is the crazy bit. For a group, we're going to double down and offer them more money and just see if this kind of helps you get through an emergency. And so by giving you more money, we also give you more time. So we're trying to play with the product space. Right now, the digital credit products are all identical. They're all about a month. They're all like very, very similar. You know, it's really unlikely that one product works for everybody. You know, we don't have one product in this country. So I think we're trying to think about what can we do to learn about what product tailoring might really help in the system, both reducing default as well as helping people. So we're just starting that experiment with Tala now. Like I said, a bit crazy because we'll double down. So we might lose a lot of money, but hey, all in the name of research, right? So I think that piece is yet to come, right? On the innovation side, I'm actually, much as I like M-Pesa and everything, I'm actually pretty sad that there's been so little innovation, right? M-Pesa's had universal access in 2014, right? That's everybody who has a digital account, yet there's one credit product you can talk about that's the same. I know there's many people providing it, but it's one product. Amakiba is one of, so we've come up with 2 products in 4 years that we can build. So I actually think the innovation's really lagging on, you know, on what we could do relative to, given this like huge amount of digital access, we're just not doing that much. I would have thought there were, you know, 200 products of which 100 had failed, right? But that's not what's going on. So I actually think the innovation's really lagging. Like even the credit product, I'm sure, came out and everybody does exactly the same product. I'm like, why 30 days? Why not 3 months? Why not, you know? And so I think there's a lot of room to really think about what product diversity looks like and how we create good product diversity that we want. Yeah.
Mira.
So, you know, donors and others are claim that a mobile account is a perfect substitute for a bank account, but cheaper and more convenient. And then you look at China and elsewhere who are requiring an account at a bank to use digital payments like WeChat, Alipay. And so just looking at the Kenyan model where it's more of an a la carte access to financial services off of the mobile account, just your thoughts on whether a mobile account could be full service or if there are advantages, disadvantages of traditional bank accounts.
Good question, Leora. This is all I have nothing on a research sense to say. I think these have to end up in the banking system. They just have to eventually end up in the banking system. So, I mean, M-Shwari is getting you halfway there. You're linked to a formal banking system. I just think bank accounts will be digital and largely digital and not branch-based and not kind of the traditional way we think of them. You know, I don't like the a la carte. I really don't like the a la carte. It creates disincentives for integration in some ways. You know, I have 5 digital loans from 5 different people kind of thing. And, you know, I don't like kind of the way the credit bureau, which I've already talked about, sits outside this system in a way people don't quite get. It's a new thing. So I think the a la carte creates extra transaction costs, and they're not cheap, right? So M-Shwari charges 7.5% a month. These are not cheap a la carte options. And it's because there's not a ton of competition, right? And so I think the banking system would naturally provide maybe more competition in that sense. So we think it should in some sense. So, and then M-Pesa is not that cheap, actually. It's really not that cheap, right? It's really cheap for person to person when it has to go. So the average transaction in our first round of data was traveling 200 kilometers. That's a $5 bus ride in Kenya. So yes, I understand 35 cents on your phone, $5, big difference. But if I want to do anything that's not a spatial cost thing, right, it's expensive. Even the fees that they now have on retail, 1%. 1% is not small when you're poor and you have cash as an alternative, right? So I just think you have to think about, if you really want it to be more broadly used, the pricing models have to change. So it's just not that cheap, ultimately, right? Yeah, the withdrawal fees are not small, right? It's still got withdrawal fees that are not small. So I do think the a la carte at some point just adds extra transaction costs in ways that are unnecessary. Yeah, there's been an attempt in Kenya to integrate banks. So there's something called KITS or PesaLink that does cheap transactions bank to bank. But again, it's bank to bank. How many people actually have bank accounts, right? So it's not helping that much. It was supposed to be the competitor to M-Pesa, but none of these people actually have bank accounts, so it doesn't help that much. But at some point, I think that will be the sort of way to go.
There was another question there. Yeah.
And this is more of a generic question, like as we sort of this mobile payments keep growing, the relevancy of the regular banks sort of goes down. I mean, obviously they're still required. That are there any banks getting into this kind of business as sort of a?
Yeah, all the banks are. So actually in Kenya, initially the banks really complained when it started, and the banks are not unpolitically powerful, unpowerful politically, whatever the word is, right? So I remember our first survey went out in 2008, and the central bank announced, because the banks were really complaining, the central bank announced they were going to audit the system and that they had contracted this MIT and Georgetown professor to do a survey for them. And I went, you didn't contract us, thank you very much. I will send you a bill. Of course, I didn't. But you know, we had a bunch of questions around fraud and stuff just for our own purposes to try and understand what was going on. And then basically it kind of became too big for anybody to shut down, right? Like by the time the banks complained, it was too popular. So the banks got involved in two ways. One is they all became agents. If you can't beat them, join them. So they've made a ton of money on commissions from agents because, you know, M-Pesa as an entity lost money for 3 years because they were paying their agents really, really well, right? Because you want, the agent network is your success to this. And so banks all became agents. They became super agents, which is agents to the agents. So they joined in this other way. And then M-Shwari is a bank product. It's actually a bank that did no, you know, had like 2 branches in Nairobi and that's it, did no retail consumer banking. It did firm banking and played in the interbank market. And so they started this as a consumer lending product because they didn't have the branches to build a consumer lending product. So it's really funny, when we're doing surveys, we have no idea where these people are and they don't know. They have no idea where their clients are on M-Shwari because it's not branch-based. I have no idea where you are. And then Equity, which is another big bank in Kenya, has created a new product, Equitel, which is a credit product. KCB, which is another big bank, has a competitor to M-Shwari. So I think the banks are getting involved, but realizing that they might have to use the mobile money rails to start. So we'll see. But yeah, they are getting involved because the credit piece can only be done by them, really, right, ultimately. And a true deposit piece, that savings, can only be done by them. So I think they will get involved. Yeah. Thank you. Thank you.
Good job with VoxDev too.
Yeah, I should have done a plug for Vox. Send us stuff. Oh, but we have your stuff. You need to tell everybody.